silver is finally catching up. Gold is being rewoven into the monetary fabric of the globe. Business has gotten really busy lately, but busy, I would argue, with much more well-heeled investors that are getting concerned. The world is moving away from treasuries and dollars and paper promises, and then you add on to it sanctions and tariffs. After 4 years of nightmarish domestic and foreign policy, prior to this administration, you could argue a system that is fully based on trust has squandered the majority of it.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Andy Schectman, the CEO and president of Miles Franklin. Andy, thank you so much for joining us today.
Elijah, it's good to be here, my man. Thanks for having me. I wouldn't miss it.
Well, it's great to have you today. Thank you so much. Our viewers always appreciate hearing your insights in the bullion market, in the gold and silver markets, what's happening right now. Just today, for the first time in over a decade, I think like 13 or 14 years now, silver broke above the $44 level. So I think that's the big news today. Also, gold is reaching all-time highs above 3,700. What would you say are the main drivers at the moment?
Well, I mean, it's physical demand coming into the COMEX, coming out of London, coming out of Switzerland. The demand is off the charts. The lease rate in London, which is typically 0.5%, rarely gets above 1 or 1.5%, even in times of stress, and then it would typically only be for a short period of time. The lease rate is the rate at which it would cost to borrow bars to short or to cover a position, is as high as between 5 and 6.5%. And that's an anomaly, to say the least. It signals great tightness inside of the market at the highest of levels. The amount of silver that's coming into the COMEX is off the charts. From a technical formation, you have a 45-year cup and handle that might be as powerful of a formation as you will ever find in technical analysis, especially one that is mature as silver. 45 years, and the way that it works is the beginning of the cup would have been 1980 at $50, and then it goes down to the bottom, the shape of like a bowl or a cup, to $4 or thereabouts in the early 90s, and starts to come back up to 2011, almost to the top of the cup. Doesn't preach it. Comes down in consolidation for the handle, and here we are at basically $44, very close to moving back up. Now, the way that works is once you breach that level, the top of the lip of the cup, the $50 level, first of all, there is no resistance at all. But the way technical charting would work is that you take the difference between the top of the cup and the bottom, which is approximately from 50 to 4, about $46, you would add it onto the top, and your next target upside would be $96, 96 to $100. Is that crazy? No, it's not. I mean, triple-digit silver is something one could expect at some point. And then when you realize that the government reclassified silver now as a critical element, a critical mineral, they've put a floor under the price of silver. And so I think, all of the talk over the last 6-7 months, and I said no from the get-go, this is not about tariffs. Never was. It was a ruse to bring it all back. This is reshoring. This is understanding that the biggest money in the world understands the significance of things like silver. The biggest traders here in the United States, the institutional traders, when they start to pay attention, when they start to accumulate, we should all pay attention. We've been talking about this on a central bank level for a few years now, about the deliveries into COMEX for a few years now, about the accumulation by India, by Russia, by Saudi Arabia, by China. China flying around the world and buying doré when they're the second largest producer in the world, sending it back to China for refining. Why would the second largest producer of silver in the world find it necessary to fly to Latin America to buy concentrate and doré directly from a miner, pay double what the West will, ship it back for refining if it were just this this rock that hasn't done anything forever? And I don't know, silver right now feels to me like gold did about a year ago when it was right in the $2,100-$2,200 range, and it kept trying to break out and would, consolidate and try to break out, come down, consolidate in a long period of consolidation, and then broke through, and it hasn't looked back. I would say that's about where silver is right now. I look at it as the most undervalued asset in the world, and now evidently the United States finds it significant enough to call it critical. I think there are very few opportunities asymmetrically where you have such low downside and such high upside being asymmetrical. For an asset like this, it's once a generation. So I think the drivers are big money waking up. Now, you could argue that the public is not even part of this rally yet. What happens when they collectively wake up? This is being driven by people at the highest of levels before the public catches on, which is another contrarian indicator. So, yeah, I think what's driving gold and silver is that silver is finally catching up. Gold is being rewoven into the monetary fabric of the globe. And thankfully, someone in this administration, I think, grabbed President Trump and said, if we don't do this, we will forever regret it. This is our last opportunity to bring some of this home because the world is moving away from treasuries and dollars and paper promises. And then you add on to it sanctions and tariffs. After 4 years of nightmarish domestic and foreign policy, prior to this administration, you could argue a system that is fully based on trust has squandered the majority of it. And then, look, I would vote for President Trump again, but I don't agree with the way he is antagonizing even his allies, like India, as an example, throwing on 50% tariffs, and many of the other countries in the European Union and Canada. Maybe there's something bigger at play, which we've talked about a lot, but I think it's just beginning, quite frankly. Look, you have a comment coming out of Goldman Sachs a couple weeks ago that if the market even thinks that the Fed has lost independence, well, okay, the firing of Lisa Cook, who's going to go in there? It'll be a Trump bobo. You look at Stephen Murin replacing the last Fed official who left, who is the author of the Mar-a-Lago Accord. The Fed has lost independence. And mind you, this is nothing new. You go back through history, you'll see this happening with multiple presidents, but it's like they give you crumbs and the crumbs, well, we told you that this could happen. And now you have, banks talking as high as $6,600, 4,000 being base case for most of these banks. Look, you put silver at 5,000, like Goldman says, and divide it by 70, which would be, way higher than its average for the past 100 years, and still 10 times higher than it's coming out of the ground at. You're talking $75 silver or thereabouts. So, to me, this is just beginning, Elijah. Honestly, I do believe that, and I think this is the time that most of us have been talking about as, typically following suit way early, but I'd rather be months and even years early than 60 seconds late when the switch flips on this.
Right. And I think this period of time has been, 14 years since we've seen $50 silver. And, before then, decades from the 1980 when we saw $50 silver, this idea that silver was below its 1980 high is kind of crazy. And it's still below that. And you can't really say that about any other commodity out there. Gold's at all-time highs. It's way above its 1980 high. But I think this time frame, from here, it's just $6 more, right? We were just at $38 silver. You just make that same move again. We're at $50 silver. And as you mentioned, there's a strong argument to be made. We could see significantly higher prices for silver. I did want to ask you about what you're seeing in the bullion market. One thing that I've noticed over the last couple of weeks is an increase in premiums on some products like gold American Eagles. We're seeing increase. We're seeing some increase in platinum products. What is your take on, do you think the public is moving in at all at this time? It seems like there's still pretty low demand on the retail side here.
Well, business has gotten really busy lately. But busy, I would argue, with much more well-heeled investors that are getting concerned. It's easier to make money than it is to keep it. And I think a lot of people who have, maybe they're getting towards the twilight of either their career or of their lives, and they're looking at things that are unfolding here. There's a very deep interest all of a sudden. But to your point, yeah, the public is still largely anesthetized when it comes to the merits. I've talked, and I'll get to your question on the premiums, but I've talked at length with people like your father over the last few weeks, where we see all-time high participation in the stock market at about 55% by the public, highest ever, higher than the 1929 peak, higher than the .com anytime. And along that same lines, you have the highest participation of the retail crowd in options ever, which is speculation, and the highest margin debt, over $1 trillion ever, which is leverage. So the public is all in on speculation and all in on leverage, as the insiders, Warren Buffett sitting on $500 billion in cash, Bezos selling $7 billion in Amazon since June 1st, the insiders at NVIDIA dumping shares, the board members, the insiders, Jamie Dimon, all of these people selling stocks, Zuckerberg, the insiders are selling at a 7-to-1 clip. The institutionals have been selling between $2 and $4 billion a week since June. And so you have the insiders with the information leaving, and the public all in on leverage and margin and speculation. And then the other end, you have deliveries coming into COMEX that no one has ever seen before. At the same time, the public has zero exposure to it. So you talk about a contrarian indicator on both sides. It's enormous. The premium thing is the strangest thing I've ever seen in my career. You're right. The Eagles are going up, both gold and silver. The U.S. Mint hasn't made any platinum Eagles in at least 2-3 years, none this year. We'll see if they make them next year. The rumor is they're not. Platinum is very similar to gold in terms, in my mind, of its manipulation, its setup. You have the head of the Japanese Tokyo, the TOCOM, Tokyo Commodity Exchange, who says, look, London is trading 3 million ounces a day of spot contracts, deliverable platinum contracts, but there's no platinum in the vaults in London or Switzerland to deliver. You look at the chart that Ed Steer, that your dad has showed about Ed Steer, the shorting on COMEX, it's silver number 1, platinum number 2. There's a lot of value in platinum, but the spreads are high because the availability of product is low. It's a strange time. And maybe the reason you're seeing the Eagles go up is that when a lot of the new clients that we have, the big orders that we are doing, the people want gold and silver Eagles. There's a certain level of comfort for a lot of people. You have, as we've talked about at length, 11 states already that recognize precious metals, many of which is specifically gold and silver Eagles as legal tender, and the U.S. Mint can't keep up. So the primary distributors who buy all of the large shipments from the mints, when the mints run out of product, the primary distributors now become the de facto market makers, and it's a function of supply and or demand. Spreads are very high right now because the price is getting higher. I remember, just a few years ago, like even with $1,500 gold, you're talking $30,000 for a tube of silver Eagles. Now they're almost $80,000. And so cost of inventory is getting higher. Our premiums are going higher. And there's volatility that we expect to see based upon what we have seen for a very long time. But maybe the rules are being rewritten. Maybe things are changing. Maybe the government, for once, is going to let the price go higher instead of stepping on it through levered futures contracts. Maybe this has a lot to do with all the metal coming back, the reclassification of silver as strategic or critical, all of the talk of gold being woven into the back end of the treasury market. He who has the gold makes the rules, says Trump. There are a lot of reasons to think that maybe this time is different. Now, usually when you hear that, you should run. This time is different. But I will say it does feel different ultimately we'll have to see how it plays out. But I don't ever remember in all of my years doing this, Elijah, which is almost 36, seeing a market with this continual strength. And every time it's hit, it just comes right back. That is a characteristic that is certainly new, and feels like, they're just going to let it go much higher, in particular with gold, making the revaluation at some point much easier and increasing the value of the holdings that they have. And if they really are going to revalue it, like a lot of people talk about, myself included, James Rickards, Mike Maloney, the Federal Reserve, Senator Lummis from Wyoming, I mean, keep on going on, Judy Shelton, if they do, starting from a much higher peak or plateau, from a much higher base, would be beneficial to them. And when you see banks saying, okay, now it's 4, now it's 5, now it's 6, they keep on raising their targets, which is interesting. And I don't know. I think, honestly, that this system needs to go back to some form of truth, some form of credibility, some form of trust, because what we have right now is really failing on all of those accounts, not to mention fiscal irresponsibility. We talk about, August being a huge month for tariffs, like 85 billion, yet the deficit for the month was 350 billion. So our spending is out of control. Our reputation is maybe irrevocably damaged. And the biggest money in the world is showing you, whether it be the central banks around the globe or now the institutional traders here in the United States, or whoever the hell it is bringing in billions a week in gold and silver into COMEX, that these metals are far more important than the currency that is being used and conjured up to purchase it. And honest to God, in my soul, I feel like this is just the beginning. I guess we'll see. And I want people to know, I never tell you to buy metal to get wealthy. It is wealth. And that's what I think we are seeing. It's going back to its historical placeholder of wealth. And yeah, you own enough, you will be wealthy. You don't buy it to get wealthy. I think you have that opportunity with silver, but I would never tell someone to do it for that. If you buy it for the right reasons, because the system is dying and it is sick, it is diseased, and the biggest money in the world, who knows the playbook, is showing you that this is a very significant part of their path to the other side. So yeah, I think that is what's driving it, and premiums will go higher. When you listen to what Rick Rule says, 0.5% allocation, right? Getting product, if you get to a 5% allocation of the retail public, of Joe and Jane Sig, he always would say something interesting, Elijah. He would say exactly 0.5% allocation in precious metals and precious metals equities from Joe and Jane six-pack to the Harvard Endowment Fund. But what did we just see a few weeks ago? The Harvard Endowment Fund buys, I don't know, over $100 million worth of gold, I think was the number. So things are changing. Institutions are embracing. Big money is waking up, and so too will the public. Of course, it'll be far too late for most people because they move after the big money is fully positioned. We're watching the big money get positioned on COMEX and all the deliveries off of the world's exchanges, including the COMEX. A lot is being stuffed in there by big money, but a lot's leaving too. We don't talk about that enough. Where's it going? Who's taking it? It's just beginning, in my opinion.
It is really interesting what you're saying. The kind of demand we're seeing at Miles Franklin is some of the general public is moving in, but really just a lot more wealthy individuals who are buying large amounts of gold and silver eagles. So do you think this is kind of like, I guess maybe you could say, the calm before the storm, or a little sign that, we've had the big institutions buying off of COMEX, the big central banks. Now it's just the tail end of the general public that are very, very wealthy coming into the market, but we haven't seen really a huge increase in demand from your neighbors or the general public at large.
I'll put it to you this way, man. I remember vividly when gold finally broke through $400. I was a very young man at that time, and gold just forever was between $250 and $375, $80. And just like we see right now with, when the market was trying to break through 2,000 in gold, or when silver is trying to, break through 44, it keeps coming up, and it would just bang its head against that resistance. And I remember it finally breaking through 400, thinking, my goodness, here we are at $400, and then it broke 850. Like, oh my God, we're finally there. We're finally at all-time highs. And if you would have told me that we would be at nearly $3,800 on gold, and really no one hears about it, you rarely see it. Yeah, you see it on the ticker a little bit on CNBC or Fox, but it's not discussed. Jim Cramer, this idiot, just comes out and makes a tweet saying, I just wish we'd stop seeing all of this, irrational speculation in gold. And I'm thinking, you're just a moron. Where have you been the whole way? And is it irrational, or is owning stocks at the highest level of valuation ever, with the largest allocation of the retail public ever, and the largest margin participation by the public ever, and the largest option participation by the public ever, as the inside money is going the other way. I mean, the guy's just an idiot, but this is why people don't get it, because unless you're spending time watching Liberty and Finance or Miles Franklin or Peter Schiff or any of the people out there that are doing this work, Vince Lancy, I mean, there's so many good ones. I don't mean to disrespect anyone by not saying Gregory Manarino. I mean, the list goes on and on and on. And if you're not paying attention, you don't see this. You don't get it. You don't know it. You may hear this and that. You may go try and buy a necklace for your wife or your girlfriend's, anniversary or whatever, and realize, wow, gold's expensive right now. But people at large don't understand it. They don't view it. It's become so removed from the collective conscious of the public. And so, yeah, I mean, the big money is waking up to it, no question. And when I say big money, I think there's a duty when you have that kind of money to think. And I'll tell you that, and I mean, I'm serious about this. Where do you put your money at a certain point is very difficult, right? You got interest rates that on the short term, the very short term interest rates, which are coming down. I think you'll see the opposite on the 10-year. Will move the other direction, just like it did before, just like we see in London, where they've lowered rates 7 or 8 times, and yet their 30-year treasury is pretty darn well near its all-time high. The bond market controls the back end, but I wouldn't buy the back end anyway. I would own some 6-month treasuries or shorter duration, and those are coming down. Where do you put your money when inflation, the real level of inflation, is far greater than the interest that you're receiving for something as safe and liquid as a treasury? What happens if Trump gets his way and they lower rates 200 basis points to 2%? And the CPI, which is at 3.1% right now, is actually higher than the rate that is stated. The big money won't stand for that. We know that the CPI, because you've had John Williams on this show, will tell you it's 11% right now. Add an 8 to it, the way it used to be measured before they changed it. Point of it is where do you put your money? Stocks at all-time highs, bonds at not quite all-time highs, but losing demand rapidly. So much so you create something called the Genius Act, which it is kind of diabolically genius, to create synthetic demand for U.S. treasuries, because the organic demand is waning. Where do you put it? You put it in real estate at all-time highs. You put it in banks that are over-leveraged and undercapitalized, where you are now a unsecured general creditor or bail-in laws. So, yeah, I mean, I think there will come a moment where the public at large realizes this, but the big money is asking these questions every day. What do I do with all this money? And no one would have ever thought that having that kind of wealth would be such a pain in the ass, such a difficult thing to safeguard. And as you get older, you're more concerned about protecting than you are making, because, you're thinking of your children and your grandchildren, and how do I pass it on appropriately? Interest rates spike in an environment where there's that black swan. Well, the banks are in trouble. The insurance companies are in trouble. The bond market's in trouble. The stock market's in trouble. Real estate's in trouble. Where do you go? And I think people are realizing this. And, it's kind of a softball question for a guy that owns a precious metals company. But if people haven't figured out by now that I try to be as genuine as humanly possible, that I do as I say, they never will believe me. I will just simply say, to me, there are very few places where I think you can safely keep your money with a high degree of liquidity, where the biggest money in the world is showing you through their actions where they're going. And I think you will see that public catch on. But typically, the big money, well, they do this in the cover of darkness, where you got guys like, Jim Cramer, moron, saying, it's too speculative, it's frothy. They're not looking at this the right way, and they're not really part of it. But there are a lot of people who are clued in and understand where we're going and what's happening, that are buying gold and silver as a life raft. And that's the way that I look at it, but not just for an emergency, right? It's for an opportunity as well. And maybe having that dry powder in the form of something that is keeping its purchasing power against a dollar that's down 11% this year and gold up over 40, it's keeping its purchase. You go back as far as you want, and I can make this analogy in real estate and in anything. Gold maintains its purchasing power, and most other items across the board, from food to energy to real estate, measured in gold, it's becoming cheaper and cheaper and cheaper as things measured in dollars are becoming more and more and more and more expensive. You can pick anything you want. Automobiles, college tuition, and I have an answer for it. And that's the scary thing. I wrote one thing down to kind of show that it just kind of caught my attention. And it's just very simple. In 1978, a student working full-time summer job at the minimum wage of $2.65 an hour could earn roughly $1,378, which was more than enough to cover the average tuition and fees of $688 at a public university. So when you talk about inflation outpacing standard of living, it's extraordinary. But if you look at gold at its value, since 1978, when it would have been priced at, I don't know what it was back then, a few $100s anyway. But point of it is that, look at where gold is today from where it was then. In fact, let's just look real quick just to make the point. We'll see where gold was in 1978. What was average gold price in 78? Was $193.4. So if you are earning minimum wage and you're able to make, what did they say, 1,378. So 1,378 divided by 193.4. Well, you would have bought 7 ounces of gold with your minimum wage summer job that today would be worth $26,000. So that would cover your tuition in most public schools. A lot of the highfalutin ones are going to be 3 times that, because college is probably a poor example showing how much it's outpaced itself. But point of it is that, what is $1,100 worth in fiat versus in this term. I just think it's important to understand that gold and silver have done a wonderful job in the face of a dollar that is destined to continue to lose purchasing power and probably accelerate, because that's the whole premise of what they're trying to do, not only of what Trump wants to do, but Stephen Murin, who's now on the Fed and the architect of the Mar-a-Lago Accord, which speaks of a weaker dollar to stimulate and bring back manufacturing. So saving in dollars are destined to go broke, period.
I did want to give our viewers an opportunity to really see what specials we have if they do want to take advantage of this opportunity in precious metals. And I think a lot of people are trying to, maybe as precious metals are increasing dramatically, are trying to catch pullbacks. And obviously we can't predict perfectly what the future is going to hold or anything like that. But one thing I might note is that, and I would love to get your perspective on this, that, if someone is looking for a pullback, it might be that silver goes to 47 and then pulls back to 45, right? So this time of, $30 silver or $20 silver, those times might just be over. But your perspective on that for people who are looking to kind of catch a pullback here?
Silly. Luck. instead cost average. And if you have $100 to spend waiting for it to pull back, instead spend $25 a week for 4 weeks. You'll smooth out the uncertainty. The people who are talking, the talking heads saying that gold and silver are top heavy and are going to correct, maybe it is, maybe it isn't. Maybe this time it's different. I mean, when you get to the end of a cycle, like we're seeing right now, a monetary cycle, maybe a reset, a reshuffling of the monetary deck, where gold and silver are becoming more central to, I think, the plans. Silver for national security on many levels, and gold for the backing of a new monetary system that is one that's built and centered around trust. Waiting for that pullback might be silly. You might turn out to get really lucky, and maybe it is a great thing. But instead of putting all your chips on red or black, why not just cost average your way? And that's probably a more measured, safe way to make sure that you don't miss out. And in retrospect, which is always hindsight 2020, maybe it would have been better to wait, maybe not. So I would choose to fall on the side of cost averaging in smaller amounts, which you can always increase your speed if you feel the need to, or you see something that concerns you, or slow it down. So that would be, I think, a more prudent way to proceed rather than speculating, if you will, on something that you want to have in your portfolio.
In the specials we had this week, starting with silver, is the 100-ounce silver bars by Johnson Matthey. They're not making any more of these because Johnson Matthey was taken over by Asahi Refining. The bars, 100-ounce Johnson Matthey bars, are $220 over spot.
Yeah, when I started in this industry, there were 2 name brand bars, really. It was Johnson Matthey and Engelhard. Neither of them make bars any longer, and they are name brand, they are quality, and it's probably the most it's not the most cost-effective way right now. Pre-65 silver still is, but it's pretty darn close, and it is a good choice, an easy way to store it in terms of its condensed size, and it's about the size of a mason brick. And they're very cool. Everyone should own one who owns silver. I just think they're a neat way to own it, especially from a significant refinery, one of the more sought after ones even today, being Johnson Matthey.
Again, $220 over spot per ounce on those 100-ounce bars. Next to gold, we are at the 1-ounce gold Krugerrand for only $60 over spot per ounce here.
Yeah, that's less than 1-ounce bars typically are. The Krugerrand, the Rand Mint, being the oldest refinery that makes 1-ounce coins in the world, one of the most respected, one of the 6 major mints. Probably more people worldwide would understand what a Krugerrand is than just about anything else. It's an iconic coin and a great value.
And last but not least, definitely not least, save the best for last here. I know your favorite is the pre-33s for gold, especially at the extremely low premiums we're seeing right now. The $10 Gold Liberty graded MS62 by PCGS or NGC is only $90 over melt right now.
Right. So $90 over melt, which is less than a spot because it's 0.48375 of an ounce. Call gold right now at roughly $37.50. So the melt value on that is $1,814. And how much is it over melt?
Yeah, so 90 over melt, so roughly about $1,900 given spot at what you said, yeah.
Right. And so right now, a half-ounce Gold Eagle, if it's backdate, there'll be better value on them. But a half-ounce Gold Eagle, let's just call it a backdate, here at almost $2,000. So never in my career, Elijah, would I have said this. I mean, that you can buy a 62 grade certified 10 lib for that much less than a half-ounce Eagle. There were times in my career, 07, 08, where I would have paid with $1,000 gold spot in 07, 08, and 09, $400-500 premium above melt, above spot for those, above Gold Eagles. above 1 ounce. I mean, most of my career, you never multiplied it by 0.48375. It was just a half ounce. It's an unusual time. It's an anomaly. And the greatest success I've had in my career, Elijah, centers around exploiting and identifying price anomalies. This is an anomaly in historical context in every sense of the word. Iconic coin, one of the best ever. And I think of everything we've talked about, 10 times out of 10, I would buy those.
It's crazy, even that the premium on that above the gold content. So even factoring in that you're having a little bit less than a half ounce of gold, it's still a better buy than the half ounce eagle at the moment, which is just insane. And as you mentioned, really, it's great to exploit these anomalies. The pre-33s right now, and I think junk silver are really the two ones that are no-brainers at the moment. It's just crazy low premiums.
100%. And especially PCGS NGC certified like these are. I mean, it's truly crazy to me. And never in my career have I seen it like this. So that is what you do. When the opportunity cost is eradicated, in this case, in my mind, you would be incentivized to own these, and they're certified, and they're a piece of Americana, and they're going to be a minimum of 118 years old, minimum, in uncirculated condition, fully certified in museum quality, hermetically sealed holders. I don't know. It just seems like a no-brainer, like you said. I agree. Couldn't agree more.
Before I let you go, Andy, we just really appreciate you always spending this time with our viewers. Any last thoughts before we leave you?
You know, I just think that we are entering that phase right now. Usually I go back through my career, and Labor Day is usually that moment where things start to change, and we're here. And I think we're in an environment where everything seems to have accelerated. The just life has accelerated. Craziness has accelerated. And I think this is going to continue. I think that we are at that point on the curve where things are going to start to not only get crazy, but get magnified. And when you realize that all of this move that we've had, where silver has outpaced Bitcoin, silver and gold are roaring and no one knows about it. You get the public involved, and the biggest issue people will have, which has been a non-issue for over a year now, a year and a half, that's all I've talked about, is how crazy the availability is and premiums being so low. You're starting to see premiums creep. You're starting to see more people, bigger money start to come in. All it will take is one event, and this market, which has been characterized by over availability and low premiums like that, will change. And you've seen it with your own eyes over the last 5-6 years that we've been working together closely. Granted, that was somewhat related to the pandemic, but I would say look at Silicon Valley Bank as a better example, where Miles Franklin added 14,000 clients in 45 days, where we were working, yourself included, till 10, 11, 12 o'clock at night and just had to stop in order to eat dinner and rest for a little bit. As crazy as that sounds, it's true. And that's the kind of, I think, demand we will see when people realize that, you know, the stocks that they own are at all-time highs and the insiders are leaving, that the bonds that they own are losing demand globally. And I would not be surprised one bit to see bonds be a 4-letter word. Well, it is BOND, but a real nasty 4-letter word by the time it's all said and done. And I don't know. I just think it's time for people to own some gold and silver in their portfolio, because it is wealth that is simultaneously no one else's liability, that the biggest money in the world has been buying for years, and now the biggest and most well-informed institutional traders in the United States are doing it too. And who they are is another issue. Who is it? Why are we not hearing these massive deliveries that are just literally record-breaking, it seemingly every month? No one's talking about it. That in and of itself, another contrarian indicator. And these are the people who spend billions of dollars. They do not do these things just for the hell of it. My guess is they understand where we are going, whether they have the roadmap to it or have been, cued into the roadmap. I think you do what the biggest money in the world is doing. Stop listening to the Jim Cramers and stop listening to your advisor and trust your gut. In the end, I think you'll be glad you did. And instead of jumping in with both feet, as someone silly enough like myself may do, I would say cost average your way through, and you'll end up smoothing out that uncertainty curve, since really none of us have a crystal ball, at least any that work. And do a little bit of research like you do, like I do, like your dad does, like anyone who's on YouTube does. And if you do enough research, you come to the same conclusion we all have, that really it's silly to not own any. In fact, you look at things, the world, very differently. Like, you put all your money in stocks and bonds? Really? Most people would say the same thing about us. That'll change, and I think we're on the cusp of that kind of sea change. So anyways, not to wax poetic so much, but I don't know how you can get people to see that this is not just for the sky falling. It's good for that, of course, but it's also good for opportunities that will present themselves when the dust settles. And this, we'll find our way through this, but it's going to come at an expense. And I guess we'll see whatever that swan is that triggers the collective awareness. But it's always nice doing these with you, Elijah. It's nice to catch up with you, buddy, and look forward to picking up where we left off real soon. Thanks for having me today.
Thank you so much, Andy. You have a good day, and God bless.
God bless, brother.